Everyone, welcome back to another IMPACTFX video. In today's video, it's going to be a quick short one. We're going to be talking about how to deal with PA that is ugly, that is not good, that's not doing what we're hoping it would do, but how we can still manage and come out ahead in the overall day. Today's PA, it is Monday the 25th, and inside of the group, I had a couple scenarios that I wanted to take place, and I made a mistake in terms of a hedge buy that I wanted. And I'm going to talk to you guys a bit about that today, because today's price action for me, when I got on the charts today, was pretty ugly. It was not really nice PA, and the reality is that I was able to profit still inside of this ugly PA because I have my own rules and I have my mitigation and my management down to a science in terms of what I want to see happen in the charts for the higher time frame mitigation to take place. So let's dive into it quickly here and let's get in. So again, the theme is going to be how to deal with ugly PA, not great ranges, and where price just doesn't want to do what we want it to do. And so we have to understand first and foremost what our bias is. So today for me, my bias, I believe price was going to go down for the mitigation here because of the reality that we swept this internal high. This can be a strong high. We do have a flip zone. If we go over here, this area of price was broken by this flip. So we have supply here. This supply only mitigated the POC, but we also have a flip zone supply here. So I'm going to refine this to a flip zone supply. Okay. And let me just mark this as a flip zone. There we go. Okay. So I have a couple PAs that I'm looking for price to actually come into here, give me a sell off, and then maybe look for a buy based on weekly targets. Okay. Now, the reality is that price, when it actually broke this structure here, put in a flip that's not mitigated. So there's demand here. Okay, so price rallied, but if you actually look at this overall structure, price did not come back to mitigate the origin. It's going to put a line there. So now that price is inside of my supply zone, I was looking for a short. Now, before I go into the trades and understand what takes place, let's talk about how price actually delivered, and it was pretty ugly. So this is the PA that delivered inside of my session today. Okay, so what do we have? We actually had a sell-off here, a sell-off here, and then there was some buys on the internal. I did not take any buys today because I was looking for mitigation sells based on where we were inside of the EQ of the daily price range. Daily price range, high of a daily, low where the mitigation liquidity is. Okay, and I'm looking for price to run that liquidity. However, price basically all morning for me delivered inside of a 14 pip range. That is not a lot of quality price movement if you're on the higher time frame. However, if you understand what I do on a daily basis, then they're absolute trades here. So let's dive into my trades. We'll talk about how you guys can manage your risk. So inside of this price action, you can see here, I'm just going to clean the other charts off. We had a flip zone that you can clearly see I marked. I got a late entry on this one because I wasn't at the charts quite yet. I got onto the charts a little later than anticipated. Price came up, rallying off this. Price came into the POC. Now, folks, I am not going to break down these trades specifically. If you are not in the mentorship or not in the course, then maybe you don't understand what I'm talking about. But the premise of today is not about entries. It's about how do I manage my P&L expectation. So as I got into this trade, price came all the way back down to that flip zone demand that I marked previously. As you can see here, flip zone demand, price came back up to an origin. This one held an internal flip, and I got out of these trades. Now, every single one of my trades, now this trade here went 2R. So this was actually a pretty decent trade, but again, my expectations were price would come a little lower. All right, so let me just take these off to clean these up. These were my original markings. Price comes back up, folks. I moved my SL to the POC, as you can see here, so I don't know why all my trades are duplicated. Okay, so we have an internal POC, price rallied, and then boom, broke me out. That's a break-even trade. after it went 2RR, this next trade ended up going in my direction until it came into the origin flip. As you can see, I managed my expectations in my trade here as well. After price broke the origin, moved my SL, we broke, and then took me out for a 0.1R loss. As you can see, my stop loss was right above this high. Okay, my overall P&L was based on this. I've talked to you guys about how to use P&L management with a zero spread broker. So price ended up taking me out. Boom, lost that trade 0.1. The next trade came into my zone, came into the flip zone. I missed the beautiful entry at the top, came into a flip zone here. We have duplicate POIs because my charts somehow duplicated themselves, and I don't know why. Price came into the flip zone, got into a 5-second entry, and ended up getting 3R and securing that back at the origin flip of the last higher low, higher high, mitigation. Price came back in. I was looking for a scale in, believing this now could be the transitional market phase. Price came into my zone, hit the POC, boom, have a really nice sell. I overmanaged this trade a little bit, but I'm okay with it because, again, I didn't want my profits to get eaten. I took some commission losses here, and then this one ended up coming back down, and then I ended up hitting BE on these two trades too. So I did not have a great overall target session today. My session did not deliver price action the way I wanted. It may now do so from this origin up here. As you can see, this origin flip, we may have a distribution during Asian, but how did I profit off bad PA? Well, the reality is that each one of these, I understand what the left is doing. The left is coming into a 15-minute flip zone that I already understood. I should have hedged this. I was talking to the mentorship group today. This should have been actually where I bought from instead of trying to target all the way here. That would have been a 2R trade, and then I would have had a 4R trade and would have been done with my session. However, ended up taking a small loss, secured 3R, and took 2 BEs. This is not a great day for me. Normally, I'm 5R done within an hour. It took, what do we have here? It took 4 hours basically of this price action from 6 o'clock to 10 o'clock for me basically to secure 3R and then obviously take some commission losses on the BEs. But this is sometimes what price delivers. I'm not looking for in my system perfection. What I'm doing is managing my risk based on how the market delivers. And if we go into the lower time frames, like a 5-minute, you can see that where I was looking to enter was off of higher time frame supply, with the expectation that this would give me a trade down to here, and then I was selling at origins and flip zones of the internal price for the mitigation cycle. And unfortunately for me, price just didn't deliver what I wanted today. No big deal. That happens because the reality is, folks, that if I can't get into these expansion trades, that I might get stuck some days inside of a distribution or accumulation range. I don't know that. What I'm hoping for is obviously price comes back down here before it does that. But if I get caught in a range, I have to manage my P&L appropriately, and I can't just let emotions dictate what I'm doing. I'm allowed, in my rules, I'm allowed 5 trades per day. And today I had to use all 5 of those trades based on what I was seeing in the market and then manage wisely so that I don't take 5 full R losses. I'm okay taking 5 little tiny losses because that is within my P&L management and my allocated risk assessment. But what's not something I want to do is take 5 full R losses. So if I would have taken 1 or 2 full R losses here, I wouldn't have taken 5 trades for the day. I would have stopped because that is just outside my P&L allocation. But I'm allowed 5 trades per day. Okay, so I wanted to post this video so that you guys understand there are going to be days that just don't play out the way you want them to play out. And you have to keep your head on. You have to keep your emotions in check. We have to understand that sometimes during our session time, which for me is 6 to 10, but usually I'm out of the market by 7 o'clock. And if I would have bought where I should have bought at 650, I would have been out of the market, because if you look at here, if I would have taken a long on the internal and we used a 2.5 pip stop loss, okay, this buy would have ran almost 1 to 5. So I would have had a 1 to 5 RR trade, or maybe I would have partialed this 2R trade and then bought because this was my hedge zone. But but I missed where I should have bought. I didn't, if you look here, I didn't mark the proper zone from the internal break of this high. Therefore, this 2-hour trade ended up being a BE, and I didn't get my hedge that I normally get if I'm wrong about my initial assessment. Okay? So, some days are good. Other days we have to really aggressively manage our P&L, and other days you might take small losses, and those are okay as long as you're managing your risk and you're managing your emotions appropriately. We can't always predict that price is going to be beautiful like this, like boop, 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 boop. We can't predict that. All we can do is learn where to enter our trades and manage our risk and let the edge play out over and over and over every day, and that your overall P&L will keep netting positive if you can do all those things properly. Okay, so this is a very short video, but I wanted to get this out for you guys in the community because it is an important lesson that some days are just going to be bad PA, and we have to just adapt. We have to learn how to manage and not be FOMO, and not be greedy, and not start getting all emotional saying, oh, why did price not do what I wanted to do? There's no such thing in the market as perfection. We can get as close as possible if price abides by the rules that I set out for you guys, but some days it wants to range and do something funky, and we just have to flow with it. All right. Okay, now let's contrast that with today. Originally, I was not going to have. Originally, I was going to send out what you just saw as one single YouTube video. However, it's now Tuesday, March 22nd, and the PA delivered absolutely beautiful for what I was looking for and what I told the group we'd be trading this week. So let's talk quickly about it. And I'm not going to make this too long, but I want you guys to understand, don't let bad PA days ruin your weekly progress. Some days are bad PAs, but you have to remember that tomorrow's a new day. Stick to your edge, stick to your strategy. And what I was doing yesterday is I was looking for sells here. The reality is price sold, trading a sell to buy, up for the mitigation of the daily flip that I had told the group we might see from this origin. So inside of my weekly outlook for the group I sent this week, I was looking for this liquidity to get run, but I mentioned we could have a rally for the mitigation of this cycle. So what happened? We had a beautiful mitigation for this flip zone, and that's where I was selling from this morning. So let's go to the 1-minute chart, to every single trade that I took today, because there was some hedges, and I do trade a bit more complex that some of you in the community, as well as some people in the mentorship, trade. I do a lot of hedging based on what I'm seeing in the market. And so this is what I was looking for, folks. This area was the area I had mentioned to the mentorship group where we had our daily flip zone. Price came into the daily flip zone, and someone in the free Discord channel asked, Kyle, why didn't you take a sell here? If you look at the time, that's 3:30 in the morning. I am not at the charts at 3:30. So when I got to the chart, which was right here, we have to look at what is taking place. Let me put this in bar replay mode. So I got into the charts right around 6:15. So price had done this, okay? That's 6:07. When I got onto the charts, folks, what do we see? First, let me take the trades off so you can see clearly. I had two ways I was looking at price. One, for selling, that's supply, and we had two internal bosses. Two, external price is coming into a flip zone. This could be a mitigation for this leg. So this could be this, right? And that could continue to maybe take the liquidity of the weekly flip zone. But my bias was selling today. But I was willing to look for potential hedges. Where would those hedges be? Well, those hedges would be in demand right down here. So as price delivered off the sells, I caught those sells. I took a BE on the buy, and then I caught another sell as price delivered. Okay, and I've been in sells all day based on the fact that I'm looking for this overall liquidity to get run, or at least price to come into the flip zone. Okay, so we could see a rally off here, or this will absolutely tank for the liquidity of the week. All right, so when we look at now the trades, these are the trades. Let me clean off some of the extra drawings. So price came into the origin, took a sell. Price came into the origin of the internal demand, took a buy, went BE pretty quickly on the 5-second chart. I looked for a buy to sell creation. This was a buy to sell creation. I mentioned in the mentorship group, it's a high risk trade, so I used half risk. I got a sell and I partialed and I trailed out at the origin of this inducement. I wanted to see that inducement get run, but the reality is if you go to the 15-second chart, price off that origin actually reaccumulated. Price broke structure, held the origin, broke. I partialed my trade and took one R, and the other part of that trade hit break even. The next trade I looked at was the origin flip. Got into another trade. Again, I partialed out. Why did I partial out? Because price came into the origin flip of this bullish price action that swept the high. So what does price do? That's a lower high, lower low. That's inducement. Price comes into the origin, holds the low. Boom. I got out of my trade because that's an accumulative pattern, folks. This is how you can manage your trades very wisely from day to day, and you can get in and out of the market. Now, I took this trade. It was a bit more of a complicated trade that I talked to the group about. This would be an internal breaker. I got into this trade, and that is the trade that ended up running. I got 3R because, again, guys, I used the same sort of management. Price came down into this origin. I partial 3R, and now I've let a runner on, and we're looking for people could have kept looking for continuations all the way down instead of looking to the left. The left causes retracements, and the internal price will cause continuations. You even had a really another beautiful inducement with an origin sell, and that people could have caught when they understand the overall higher time frame was wanting a mitigation. Let me just clean off my charts. Wanting a mitigation and now potentially a continuation of the bearish internal price all the way down for an origin. Okay, so I wanted to quickly give you guys that information because it goes hand in hand with the previous topic. Some days PA will not deliver how you want, and tomorrow may deliver perfectly how you want. Make sure to keep your emotions in check and stick to your rules. Don't let a single day ruin the progress you've made either for the week or the month or whatever. Don't let your emotions take control. Stick to the edge and just trade your system. All right, everyone. We'll see you on the next one.